The challenges that you come across as a trader that prevent you from sustainably growing your account, or in other words, being profitable, and identifying what those challenges are, how to overcome them, and work through that process on an ongoing basis. This is arguably the most important lesson for traders to learn beyond the concepts of trading and financial markets that you need if you want to be successful in trading. We want to make sure everyone understands how to sustainably grow your account, whether you're trading stocks or options. And specifically what we're going to do is understand the behavioral biases that prevent us as human beings and traders from reaching that success. Many of you have already spent a lot of time understanding technical analysis, options trading, yet you might still find it difficult or a bit of this uphill battle in terms of consistently growing your accounts. The primary thing that I want you to be able to walk away from this session is a clear understanding as to how can I overcome the inability to consistently grow my account profitably. Now, I know many of you may find yourself falling into this particular category. Right now, what we're committing is an entire summit, an entire 4-part series to this very topic, because arguably, if you're not growing your account sustainably, I'm not sure why you would be here. We're all here because we want to confidently grow our trading account. So my goal here with this session is to empower you to grow your trading account sustainably, and which in short is really just short for being profitable in trading. That's my goal with this trading summit, making sure that you understand what you need to learn and how you need to apply yourself in order to be profitable in your trading. And this comes down to 2 things in my opinion. Number 1 is confidence. Understanding how your emotions influence your behaviors that contribute to wins and losses. If you want to be confident in trading, you have to understand your behavior and the actions that you take as a result of it that will contribute to being successful and being profitable as a trader. If you don't feel confident, you're not going to get there. So this is the first thing I'm going to tackle here today, is helping you understand and overcome the behaviors that you have as a result of those emotions that come up as you trade, especially when you go through wins and losses. The second thing that's important for you to understand is consistency. Building the ability to stick to your trading plan regardless of the current market conditions and your open positions. This is something that a lot of traders struggle with, and we'll talk about why you struggle with and helping you understand that it's okay that you struggle with it and the ways that you can overcome this. But those are the 2 things that we're going to try to help you understand. To think many of viewers that are watching here today have probably spent countless hours and countless dollars on one of these 3 categories, if not all 3. First one is technical and fundamental analysis. Many of you tend to be more technically inclined, studying charts, reading books, taking courses on chart reading to help you better understand the directional view of the market and timing, when to enter and when to exit a specific trade. You might augment this with fundamental analysis to give you a different view, to help confirm your views. But this is really where I spend a lot of my early career learning these specific techniques to help me get better at understanding the markets. Now, keep in mind, understanding the markets and trading the markets are 2 very, very different things. And that disconnect is usually why a lot of traders that find themselves quite knowledgeable on technical analysis and fundamental analysis might still struggle with gaining profitability in their trading. The second thing you might have spent a lot of time and resources learning is options trading strategies, concepts, volatility, straddles, strangles, butterflies, all types of strategies. Better understanding these strategies, hoping that by better understanding those strategies, you'll be more successful at trading. So I'll stop there for 1 second, because I'm guessing most of you here on today's session have spent a fair amount of time and money learning these 2 concepts, technical analysis, or rather technical and fundamental analysis, and option strategies and concepts. Yet, despite that, you still might find yourself feeling unconfident in your ability to grow your trading account. Now, why is that? And this is really something that we're going to take the time to explore. The third thing that I see a lot of traders spend money on and time and resources are what we call signal services. Services that basically say, I'm successful at trading, so if you will just follow me, you'll also be successful at trading. Now, I think at this point, most investors have noticed that just by spending time and efforts on all of these three in itself does not in any way, shape, or form guarantee that you'll be confident or even have the ability to consistently grow your trading account. I also saw someone saying, I don't have the money for a Bloomberg terminal. And that is another thing that I've noticed, that a lot of traders will say, I don't have access to enough data, or I don't have enough access to certain information. If I just did that, I'll somehow be able to be successful at trading. And that couldn't be further from the truth, because, I have been doing this for 17 years and I have spent countless hours with thousands of retail and institutional investors. And I can tell you for a fact that none of these three things, your ability to do technical analysis or fundamental analysis, your skills in option strategies and concepts, or which signal service you choose to subscribe, is going to contribute to your ability to succeed in trading. And unfortunately, this is really where I would say 95% of traders spend 100% of their time focusing their time and efforts on is honing their skills on technical analysis, options trading, and following other people. Now, are these three things important? Yes, meaning you can't possibly trade without these foundations. These foundations are important. However, these foundations are useless, or I shouldn't say useless. These foundations cannot be enough in terms of being successful as a trader without some of the other things that we're going to discuss during today's session. So what I have found in my 17 years of trading and being a market strategist, helping others understand how to trade this market, is that successful traders, it's rarely, almost never, due to some kind of secret strategy or indicator or access to some kind of terminal like a Bloomberg terminal that somehow you don't have access to, and they're successful because they have access to some secret sauce. That is almost never the case. Some of the best traders that I have worked with have arguably some of the simplest strategies that you can possibly use. Simpler many times is better. But what they do have in terms of a characteristic that is very, very different from most traders is their ability to follow their trading plans and consistently regulate their emotions, especially during times of loss. This is what really sets successful traders apart from those who struggle with gaining consistency. Their ability to manage their emotions and understand how their emotions affect the behaviors that they have on their trading accounts. Now, from my perspective, it's incredibly easy to come up with a trading plan. What's not easy, what's incredibly difficult, is your ability to stick to it. And this comes down to the fact that we're human. What we tend to do is that as human beings, we make counterproductive decisions, especially when we're placed under stress. And this is why it's so important to understand your emotions, understand how you behave when you are under duress, when you're going through a losing trade. Even when you're going through a winning trade, I would argue there's still stress involved in that because you have a win. How do you then make sure that you capture that win? There's stress around, should I take profits now? Should I wait? So these are all stresses that technical analysis, options trading, and following someone else, unfortunately, does not teach you. And especially this particular fallacy that if I just follow other traders that are successful, I should be able to replicate that success. What you're not learning in that particular case is the emotions that trader has to go through to manage their trades. They're not teaching you that. You're not capable of learning that because it's not your strategy. That's why it's incredibly difficult to be successful, even though you're following other people who claim or are successful in their trading. So this is really where we enter the realm of what's called behavioral finance. You have traditional finance, which is what we talked about before, technical analysis, fundamental analysis, option strategies, that's traditional finance. And unfortunately, I see, again, 95% of traders spend 100% of their time learning traditional finance. Arguably very, very important, and very, very few people spend any amount of time at all looking at behavioral finance. And I would argue that you should probably spend at least 20 to 30% of your time focused on this aspect outside of traditional finance. So, what is behavioral finance? What does it actually mean? Behavioral finance is really studying how we behave in terms of making decisions with regards to money and our finances, because as human beings, we act surprisingly unpredictable and irrational when it comes to making decisions around our money. And there are so many examples of this, but just a good example of this is we walk into a store, we see an item is on sale. We notice that even though we may not necessarily need that item, we don't have a desire, we didn't come into the store for that item, we end up buying that item because we feel like we're getting a good deal, right? Think about Costco. Think about walking into a Costco. You walk in there to buy some toilet paper, and you end up walking out with 17 gallons of mayo and ketchup and all these other things that you didn't really intend on buying when you first walked in. You walk in with the best of intentions, but you end up making decisions that are irrational many times, especially if you look at it backwards. And if you look at your behaviors, you realize that there's a lot of things that we do that do not make a lot of sense and are what we would consider as irrational. Think about gambling. Why do we gamble even though we know that the house odds means that in the long run we will lose money to the casino? Why do people still spend billions of dollars losing money at the casino? That's irrational, but we do it. And this is really the part of understanding how our behaviors contribute to our gains and losses that it's important for us to understand. It's the same behavior that we have when we're holding onto a stock that's free falling and we keep telling ourselves it has to go back up, let me hold on to it. And in order to trade profitably, we must understand ourselves and our behavior. We spend all this time understanding the markets. We understand technical analysis, fundamental analysis, options trading, but do we understand ourselves at all? Do we understand what behaviors we have that contribute to underperformance in trading? And this is where 90% of traders overlook this area of finance. So I want to walk you through some of the particular behaviors that we have as human beings that contribute to our inability to be profitable. First one, inability to take a loss and holding on to a losing trade. There are lots of reasons as to why we do this. And we have excuses that we make to ourselves as to why we hold on to a loss, because someone, an indicator turned positive, whatever crazy thing we can come up with our minds to hold on to a loss rather than taking on that loss. But really, what is the thing that why do we do this in terms of behavior? And this is really where it takes some time to introspect as to why we do this. But traders have done this introspection, right? You don't have to do it to figure it out. We can help you understand why we do it. And it really comes down to avoiding pain, right? If we take a loss, we have to accept the pain of we're wrong in the trade and we've lost money on that trade. Number two, we take profits early. Trade goes in our favor. We're up 20%, 30%. We take profits. Next thing you know, the stock is up another 5-10%, we missed out on those profits. Why do we take profits too early? Again, to avoid taking on pain. What pain are we avoiding when we try to take profits early? What we're avoiding is the pain that we would experience if our gain now evaporates and turns back into a loss. Because we've all experienced that, right? We've had a trade go in our favor, we get into a trade, it goes in our favor, we hold on to it, and the market reverses and we lose money on the trade. So why do we take profits early? Is we want to avoid having to accept the pain of potentially losing the gains that we have so far and turning that into a loss. And what you start to realize is that all of the behaviors that contribute to our inability to be profitable in the long run, holding on to losses for way too long, not waiting sufficiently enough when the trade goes in our favor to be able to take advantage of the reward, and taking small profits and taking on huge losses largely is what contributes to 80% of traders saying that they're not profitable in trading. These first two points. And it all comes down to, as human beings, we want to avoid pain. Third thing, taking partial profit. And this is the part that this one is somewhat debatable, in my opinion, because there are situations where it makes sense to take partial profits. But the thing that partial profits do is that you're basically, as the trade goes in your favor, you're reducing your exposure. And that means that if the trade continues to go in your favor, you're going to make less money as a result of it. And that's really the debatable part about this particular strategy. You're doing it's slightly better than taking profits early, but there's still elements of this particular strategy of taking profits early that contribute to not being able to capture the upside when the trade does go in your favor. But like I said, there are some scenarios, in my opinion, where it does favor, or rather makes sense, to take some partial profits, especially in things like credit spreads, where even if the stock continues to go in your favor, your upside is fairly limited. In those particular times, taking partial profits makes sense. But largely, it's important to understand that these behaviors all come down to not wanting to accept a win that could turn back into a loss. We're concerned that the win that we have is going to turn back into a loss if we don't take profits or partial profits. The next one is arguably one of the most destructive ones to portfolios. When a trade is going against you, and instead of cutting losses, you add to the position, hoping that by doubling down or adding to the position, you have the ability to get yourself back to break even. Now, this is very much tied to the first one, not wanting to take a loss. And what you're doing here is, instead of being passive, you're being active in doing something to take a loss. And this is really interesting from my perspective, when you think about the behaviors, right? Because when you're being active, you think that you're doing the right thing. And in most other instances in your life, being active is the right thing to do when something's not going in the direction you expect it to. Think about a work scenario, a project that you're working on, something in your life that's not going the way that you want it to go in. As a human being, you take action, you do something about it. If it's work, you do something, you bring your team together, you try to fix the problem, right? And by doing so, you can potentially fix the problem. Something in your personal life doesn't go wrong. You talk to the person that you have a problem with, and you try to correct the course. The problem with trading is that when the trade is not going in your favor, there's nothing you can do to correct that. Meaning, you cannot turn around the market. You cannot you think a stock's going to go up and it goes down. There's nothing you can do to influence that stock to go back up. And that's the fallacy that we have by adding to a position. These three things are arguably on this list the thing that contributes the most to why we cannot underperform as traders. It's these behaviors. If you experience these behaviors, or rather if you conduct these behaviors, you will find yourself unprofitable in the long run. Some of the best traders who are able to accurately predict the markets about 60 to 70% of the time. And that's someone who's fully confident in what they do. There's not many areas in your life where you can say that I'm only right 60 to 70% of the time and say you have full confidence in something. But this happens to be one of those cases. And there's a big disconnect there, to say that how could I feel confident in something when I'm right only 60 to 70% of the time at best? I would say most traders are probably right 50% of the time. But keep in mind, you can still be profitable being right 50% of the time. In theory, you can be profitable being right only 30% of the time. It's harder to do that, but you can do it. And I've seen traders be right only 30, 40% of the time and be profitable in the long run. And it's whether your wins at the end of the day outweigh the total losses that you have. That's the only metric that matters, not how often you win or your win rates. So this is really an important thing to wrap your head around. It's important to understand just taking the time to, when you're going through a loss and you're stressed about what to do, should I cut my losses? Should I hold on to it? Or if I'm a gain, should I continue to hold on to it? Should I take profits? Take a step back and think about how you're feeling, because how you're feeling is what contributes to the behaviors. And in order to change those behaviors, you have to first understand how you're feeling. So, overcoming biases. What can we do to overcome this? And this is something that we're going to learn over the next few weeks. The first thing is self-reflection, taking the time regularly to evaluate your current and past trading decisions and emotions. You may have some of you may have started to do this. Some of you, this might be brand new to you, but keeping something like a journal is a good way, especially when you go through a big loss or a big win, to understand what you did right, what you did wrong, and making sure that you understand how you were feeling at the times that you made these decisions. Especially if you go back and you say, hey, I doubled down on a trade that I shouldn't have doubled down. Going back to that, writing it down, understanding how you feel, because that's going to hopefully help prevent the next time you feel that way from contributing to the same behavior. Now, there are many ways that you can go about being self-reflective and understanding kind of your emotions and how they contribute to your behaviors. I myself happen to use a form of meditation. I've been meditating on and off for the past 10 years or so, and it's been incredibly helpful in understanding my emotions and understanding how I'm feeling in a particular moment at that time, because a lot of times our emotions, we tend to, it's a very subconscious understanding, meaning we don't really actively know that we're feeling sad or angry or overwhelmed. It's something that sometimes only after the fact can we reflect on that. It's very difficult in real time to do that. And meditation has been an incredible tool for me to get a better sense of how I'm feeling in real time and recognize how I'm feeling and know that, okay, when I feel this way, I tend to have these specific behaviors. Only when I'm able to recognize those things in real time do I have a shot at correcting my behaviors. Now, other people use visualization techniques. There are many different ways that you can go about doing that. I myself happen to use meditation. And then the third thing that we're going to learn in terms of overcoming biases is really position sizing strategy. What do you do in terms of when you initiate a trade? What do you do in terms of sizing as the trade goes against you? And what specifically do you do when the trade goes in your favor? I get the question, are these sessions recorded? Can you get access to the slides afterwards? The short answer to your question is yes. All of our sessions are recorded. The slides are always available after the fact, and they are available to anyone who is either a member of OptionsPlay or if you're currently on your free trial. But if you're brand new to OptionsPlay and you don't have a free trial yet, if you want access to the recording and you want access to the slides, you can simply sign up for a free trial at optionsplay.com/grow. Sign yourself up for that free trial and we'll send you the recording and the slides after today's session so that you can review it at your own pace, because we are going to cover a lot of things. And it's a type of topic that you want to take time to reflect on afterwards. The session. It's not something you're necessarily just going to be able to absorb everything in the next 30, 40 minutes and be able to walk away from it knowing exactly what to do. It takes time, some self-reflection after the fact to internalize what you're going to learn here today. So the recording and the slides are incredibly important.